Hello, everyone, and welcome to another edition of the market update for September 15, 2016. Okay, by popular request, we're going to be making a few changes. We're going to be including even more markets into the analysis. We have a lot of traders who trade and investors who trade the S&P 500 and the gold market. So we're going to include that and the bond market in our analysis also, along with the Forex market. So let's just take a look at what's happening. And it is also good for Forex traders in general because it gives you a broader outlook on what's happening in the various markets, and it will actually improve every area of your trading when you can look at the different markets in a comprehensive manner. And who knows, maybe you'll even find opportunities in other markets based on the principles you may be using with the Forex market. So let's just take a look at the S&P 500 first. And the thing to look for with S&P 500 is that we did break above this channel high. As you can see, let me just back up. We had a channel. This is a monthly chart of the S&P 500. So we had a channel for a number of months. Actually, it's over a year and a half. Then the market broke above the channel and is now looking like it wants to close back in the channel. If this happens, this will be fairly bearish for the market, and we could see a larger move to the downside. What you're looking for when you have a channel break is for continued momentum to the upside. So we want to see the market continue to the upside if you are bullish this market. Looking on the daily chart, the chart looks like this. You want to see the market close above this red line. If it doesn't close above this red line, we could see some follow through selling here in the S&P 500. Okay, taking a look at the US dollar index. US dollar index still firmly remains in this broader consolidation pattern. You can see it here on the chart where I've drawn this triangle. So we have a consolidation pattern in a channel, the broader consolidation pattern here with this channel. And then on top of that, you have a consolidation with this triangle here with the US dollar index. So we're really just waiting to see where this market will break. As I said yesterday, the odds are that it will break to the upside. And when I mean the odds, there's about, I'll calculate about 60%. 60% chance it will break to the upside, and maybe about a 40% chance it will break to the downside. Looking on the individual currencies, the euro, we had some numbers out a couple of minutes ago. The retail sales number in the US, the number was actually a disappointment. What we saw initially after the number is the market spike up to the daily resistance level R1 at 112.77, and the market back down a bit. So we're going to see if the market re-challenges this 112.77. So to the upside, we can look at 112.77, and let's just look daily R1, and the daily R2 is at 113.06. So those are the resistance levels you can look at with the euro. And keep in mind that this 113.06 comes in with the upper end of this triangle coming down here. So that's a number you can look out for in case the market rallies. If we do get a decline to the downside, as you can see, the support the market found this morning was right at the daily S1, which at 112.16. And pivot points work especially well in consolidation markets. You see that the markets are actually respecting these various pivot points. It's the daily S1, market traded right down to it and now rallied up to the daily R1. So we just have to see if the daily R1 will be the high, or maybe the market will go up to the R2, or even we could revisit the daily S1. Okay, looking at the British pound. Pound started the morning or the day fairly strong. It was rallying in the Asian session, and came up to the R1 for the day and is moving slightly to the downside. Please note that the daily S1 is at 131.73. So in case of a decline, look for that level, the 131.73, and also the 131.05 if we get down to that, if we get down that far. Broader analysis of the British pound is that we're in a channel. It's roughly the parameter channel. So we tested the upper portion and we got rejected. So what we could see is the market try to get back to the downside, and this is especially if the data continues to be negative, we could get a rally in the pound. But if it continues to be just okay or slightly to the downside, we could actually see the pound move down. So just keep that in mind that we're in this channel, and if the market reaches the bottom of the channel, we could, what we want to see is the market break down to the downside, and that will issue another trade in the British pound. For our members, we're short this British pound also, so we're actually biased to the downside at this point in time. Okay, taking a look at the Japanese yen. Japanese yen is unchanged on the day at 102.33. We did have a spike down earlier. Market spiked down to 101.90, but where did the market stop today? As you can see, right on the daily S1. So it just gives further evidence that these support points must be respected, especially in consolidation markets like we have here. Okay, looking at the Canadian dollar, we see that we're at resistance in the Canadian dollar, and for the bullish US dollar, folks, we want to see the market close above this red line here. And if we do close above this red line, we could see further gains in the Canadian dollar. Okay, now I have an announcement by popular demand. Earlier in the year, I believe it was in March or April, sometime around then, I was offering some free one-on-one training classes. And out of all the things that I do here at Aces Trading, that's where I see folks get immediate impact with their training, because every individual has a weak area with their trading, and with the free one-on-one class, we can go over whatever weak area you may be having with your trading. So we're going to be offering it once again here. In order to sign up for the free one-on-one class, you click on the link below this video to get started. More details about the class. The class will be with me personally, and it will be offered via GoToWebinar. So you'll be able to see my screen. I'll be able to see your screen, and then we can go over what difficulty you may be having with your trading. There's a saying that says that good traders, successful traders, do what unsuccessful traders won't do. So if you are thinking about getting started with your trading or having difficulty, this is definitely an opportunity for you to get guidance by an expert. In order to sign up for the free class, what I will require is to get out to weed out the tire kickers. Essentially, I would require a $97 refundable deposit. If I don't ask for a $97 refundable deposit, I would get 300 requests, and I'm just one person. I cannot fulfill 300 requests. So what I will ask is for a $97 refundable deposit, and then after the class, the free class, you will get back your deposit. That will eliminate 90% of the tire kickers. Again, successful traders do what unsuccessful traders won't do. So I look forward to speaking to you all, and I hope you have a wonderful day. Click on the link below to sign up for that free class.